Welcome to this week's market drama. We'll begin with the S&P 500, which was down 0.4% for the week. It is now up 1.6% for the year. NASDAQ was down a little bit more, down 0.6% for the week. It is essentially flat for the year. Oil was up big, and I'll talk about a little bit more in a second. Oil is now up 2.6% for the year, but it was up 14% this week. So what happened? What drove the market action? Well, US stocks fell mostly, in essence, like where the drop happened was mostly on Friday. And that was amid in Iran and Israel conflict in the Middle East flaring up into essentially a war, sending the market to a negative week overall. The price of oil surged more than 7% alone on Friday to the highest level in 4 months after Israeli military strikes on Iran and nuclear facilities, and then kind of the retaliation from Iran on Israel. Prior to this, earlier in the week, we actually had really good inflation data on Wednesday. So inflation data surprised to the downside with headline CPI inflation around 2.4. We also had PPI inflation around 2.6%, which was better than expected, meaning lower than expected. It's actually crazy to think about the fact that in 2022, CPI inflation topped 9% and PPI inflation was over 18%. Right? So we come a long way with inflation coming down. Now, oil prices spiking could become a factor here if it continues to go on this trajectory with the Middle East conflict. So now something to keep in mind because that was not a factor that we were looking at, right? With oil prices where they were before versus where they are now. So for now, the Fed is likely to be in wait and see, and this leads me to next week. Next week we have retail sales data, which is really important to get a sense of how the consumer is faring. And consumer, when it comes to GDP, close to 68, 69% of GDP is driven by consumption. So obviously retail sales will be a good indication here of how the GDP number is going to fare for this quarter. And then we have the Fed meeting on Wednesday. Now, Fed officials, when you look at the probability of them lowering interest rates, cutting interest rates, it's essentially zero. So what we're going to be focused on is more their dot plot projections of where interest rates in their mind should be 3, 6, 12 months out, because that will give us an indication of how they're thinking about cutting interest rates, as well as their comments around what is happening right now in the economy and how they're thinking about what factors they'll continue to focus on in the coming quarters. That is it for this week. Stay tuned for next week.